Breaking news on Martyn Lucas Investor. We are looking at ENVX in Enovix Corporation. We're going to be doing a full fundamental analysis, looking at the charts, any trade setups to come, any news potentially on this stock, and what I expect for its upcoming earnings. So let's get straight into it. ENVX. So this was a suggestion from one of our members, so if you are a member, we do videos like this for you. But this is the stock. It IPO'd not too long ago, early 2021. Its all-time highs were around $40. We don't normally like to trade IPO stocks for the first sort of year of trading because it's very volatile and normally volatile to the upside, and then it creates more value later on. So as you can see here, it opened at $15, went all the way up to $40 and crashed down to $7. So is this the point to be getting into this stock? This stock is very, very trendy. It has got the buzzword of lithium-ion batteries. So it engages in the design and development of silicon-anode lithium-ion batteries. The firm's proprietary 3D cell architecture increases energy density, which is very important what they're doing. They do have a market capitalization of 2.65 billion, so it's a fairly large company, but a lot of room to grow as this is more of a growth stock. So what do I expect looking at the charts? That's the IPO price. We do have a falling wedge pattern, which is sort of lower highs, but also sort of lower lows at the same time. And it's coming into a channel where it's being wedged. It's sort of bouncing between these levels at the moment. It has come from a downtrend. Normally falling wedge patterns are more bullish patterns, as that's what the chart suggests. More likely than not, it breaks the upside, especially if it's in an uptrend. Right now, it's in a downtrend going into falling wedge, so it's not as bullish, but it is still a bullish pattern nevertheless. We can look at some potential Fibonacci levels before I give you my what I think will happen with the stock and my trade setups. If you take from this high of the wedge to the low of the wedge, we've got a few possibilities. The first one would be the 786 as a target to the upside, which is about $22, and then the targets on the downside would be the $14, which we've already marked at the IPO price, and also the $10 level. So what's going on now? We've hit the trend line to the upside, and it looks like we've been rejected, as we have been rejected from the trend line. Where are we going to go next? $13 seems like a great possibility, coming down to $13, and then potentially $10 and $5. When I like to buy into a stock, I don't do all my buys at one level. If I'm looking to build a position on ENVX, I'd have my buys distributed between $13, $10, and even as low as $5. And where would I be selling? If I'm accumulating at these levels, what price would I want to be selling? $21 would be my first sell level. If I do have a nice position built up between all these buy zones and my average cost is, for example, $10, then the area I'll be selling, for example, if the stock does come down, bounces around, comes all the way down to $5, I've bought at $13, I've bought at $10, and I've bought at about $5, so my average cost will be below $10. Where would I be selling then? It would be around where this trend line continues. This trend line is probably going to continue giving some resistance into the future, especially if we come all the way down to the bottom of this pattern. So that's the area I'd be selling if my average is at $10. However, situation can be different. It can come down to $13, break out. I don't want to be selling all my shares at $17 just because I bought them at $13. Yes, that's a great profit. And if that happens within a month, there's a lot of different variabilities. If that happens within a month, then yes, I might want to sell, because gains of 32% within a month are great. However, if it comes down to $13, goes sideways, and then eventually moves up, I might sell a small portion at $17, my next portion at $21, and then I'll be holding more for the long term. $26, and eventually all-time highs around $40. Do I think we're going to go to $40 this year? No, I don't. I think the way this stock is performing at the moment, it looks like it's going to be volatile in a small range, and I don't think it's on course to make all-time highs anytime soon. I think it's better to try and trade it, accumulate shares, buy at levels that seem attractive to you. Those levels for me are around $13, $10, and around just above $5. So, potential trades. There's a lot of different potentials, and I'm not here to give financial advice, just a few ideas and opinions. Especially with upcoming earnings, it can get volatile, so you can try and take advantage of the volatility. One trade would be the first one I mentioned, which is buying at $13, selling at near $18. The next trade would be buying at $10, selling at $13 as your first target. You can always have a second target of this as trade as well, where you can be selling at the trend line as well. So I would be cautious. If the earnings goes badly, I would have these two trades already limit ordered, because it can get very volatile very quickly. So $13 and $10 is potential, and if it goes very well for this earnings, I'm not going to take a short position. However, I will have limit orders to sell if I already own the stock around $22 and even $26, in case it quickly jumps up to those levels on good earnings at $22 and $26. If we have a quick look at the fundamentals of this stock as well, it seems like the AI software is saying it's overvalued by 56%. Worst case, it's overvalued by 78%, and best case, it's only overvalued by 45%. Yeah, so it's saying worst case 3. Just making sure I'm looking at the right stock here. ENVX Corp. ENVX. Yeah, so unfortunately it's saying that $8.60 is base case, which is about another 50% down from here. So we might see those levels. And that's why I don't buy it. That's why I don't buy it all in at $13. I am leaving some money just in case it comes down to this $5 level. Let's see if there's any other information. 508 million in assets, 279 million in liabilities, and of those liabilities, a fair amount is in long-term debt, 168 million. So it's not going bankrupt anytime soon, but unfortunately it's not going profitable anytime soon either. The profitability score is quite low. Wall Street targets are looking much better. $11, $30 and $105. So that is more optimistic on Wall Street, which is surprising but good to see. And inside trading, they have sold $712,000 of shares. There we go. So the insiders are selling. Take note of that. Do what you like with that information. But that's my technical review of ENVX with a slight amount of fundamentals at the end. I hope you enjoyed that video. We do lots of chart analysis, so if you have your own suggestions, you can always leave it in the comments. Any thoughts on this, leave it in the comments. There are videos to watch up here and down here. There'll be a playlist and a video that might take your fancy as well. But until next time, make sure you take care of yourselves and each other.